Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P500 followed by the Nasdaq100 and the DowJones30 futures chart. First of all, I would just like to apologise quickly by saying that I couldn't post a video yesterday. I had a very busy day. The markets were very choppy and volatile yesterday, so I do apologise for not being able to get a video out and to share with you my guidance. But here I am today, and of course we're going to quickly touch on yesterday's subject, and that is that the markets just fell significantly and had a very ugly close. And I think, now it'll only be responsible of myself to come out and say that my analysis here was wrong. I think that maybe the market, I was kind of expecting a bottom here in the month of August to occur a little bit prematurely, and we haven't had one yet. If we go on a daily chart, for example, here for the S&P 500, we've now had a clear break of the 50-day EMA. And I don't really use the EMA lines as my make or break technical indicators, but that is a very negative sign. And the fact that we closed down near the swing lows for the day is not good at all. So very concerning for the markets moving forward. I think that there could potentially be some more downside movements here in the markets. Also, just want to quickly share with you a post that I shared on my signal team this morning. This was me yesterday. I had sent out some signals in Nasdaq and S&P 500, and it resulted in me losing £18,349. So this is just a message. On this group, I also share my profits whenever I make money, so it's only right that I come on and share my losses when I lose money. And this is just me wanting to be as transparent as possible. That on days like yesterday, I do lose money, and unfortunately, I don't have a crystal ball, so I do get trades wrong, as well as winning trades as well. So I want all of my viewers here on YouTube to understand as well. I'm not, I will never be someone to come out and claim to be correct 100% of the time, because quite frankly nobody is ever going to be that person. Even the likes of Warren Buffett, for example, get it wrong from time to time, and I'm not claiming to be Warren Buffett either. I just want to clarify that as well. But looking at the S&P 500, if we break it down to a 2-hour chart, we currently find ourselves trading in this downtrend line. We have found support at the bottom of this trend. It could potentially give us some short-term a short-term bounce here, but I think ultimately what will occur is perhaps us trading a little bit lower, and maybe down towards 4,350 until we do find a bottom. One thing that I have recognized here for the markets, I think it's let me just have a look. I think it's from this low here. We are currently testing the 0.786 fib area from the lows that occurred back on the 26th of June. So that could potentially act as a area of support. But like I mentioned, it's probably likely that we do go a little bit lower before we go higher. And I think what the market's trying to tell us here is that we're waiting for Jackson Hole, which is next week on Thursday and Friday. We may need to have some clarification from the Fed, from Jerome Powell, as to where rates go next. Of course, yesterday we had the Fed minutes, and the message sent from the Fed was, there are still risks to spike inflation higher, and that could potentially lead to more high interest rates, so more rate hikes, and that kind of spooked the markets, and that's why we had some pretty intensive selling. Moving over to Nasdaq100, we also find ourselves trading in a very similar pattern here as the S&P 500. We find ourselves trading in this horrible downtrend. We are kind of getting a little bit overdone towards the downside here, and we have found support this morning, but it looks like we're giving up a lot of that support, and it looks to me that we are probably going to trade lower again. So maybe 14,700 is going to be the new target here for the Nasdaq 100. Again, I think the markets are waiting for Jackson Hole next week. We also have Nvidia's earnings next week that could potentially spark some fire in the AI space, which could help this market. But I have to be truthful in saying that this market had a horrible close yesterday, and in my experience of trading these markets, a close like what we had yesterday, where we finished down near the session lows, it does typically result in further losses, and that's exactly what we're starting to see here during today's trading session. So this is kind of now approaching to be a no bid market, where I just prefer to sit on the sidelines and just kind of wait until a good buying opportunity occurs once all this volatility has passed through. Then looking at the Dow Jones 30, the Dow I actually quite like. We've hit a 50-day EMA. For those who've been watching my videos for some time, you would have heard me say that I was expecting a back test of his neckline. And at one stage, I thought that we weren't going to get it, but that eventually occurred yesterday. And I see this as a fantastic buying opportunity here for the Dow Jones 30. Unlike the S&P and the Nasdaq, the Dow holds many cyclical names, and many of these stocks are still trading in positive territory on days like today, where tech is selling off rather rapidly. So I do see this as a very attractive risk-reward area where you could potentially buy the market here. You have support at the 50-day EMA. You could put a stop loss just below. You've also got the neckline, which was a previous resistance, now acting as the new support in this market. And I think that, if your time horizon is, let's say, 4 to 8 weeks, I think that this does offer a good, attractive risk-reward ratio where you can trade it back up towards the swing highs. But a slight breakdown here in the Dow Jones 30. And, again, guys, this is something that I had been warning about in the past couple of weeks, is that August, from a seasonal perspective, is a very poor month, and you can typically expect to see a correction of anywhere between 2.5 to 5%. And if we go and look at the S&P 500 right now, from the swing highs that we achieved in late July, we're down 4.35%. So we are, in my opinion, I think we are now entering the latter stages of this correction. If you were to correct 5%, where does it take us? Down to 4,375. So this is all normal. It's all expected. The only negative is that the markets didn't bounce where I thought they would, which would be above the 50-day EMAs. So apologies to anyone who did occur at any losses during yesterday's trading session. But, going forward, it's also important to understand I do not have a crystal ball. But the good news is that I do think that this move towards the downside is nearly done. I think that we just need to await some more clarity from Jerome Powell during the Jackson Hole presentation next week, which is on Thursday and Friday. Guys, if you'd like to join my trading signal team, then please scan this QR code on your screen. It will take you to my website where you can sign up. It's completely free of charge. You get 1 month free trial, and you can cancel at any time. And of course, this gives you access to my daily market research that I post over there as well. Thank you.